It seems like this market wants to get back to its winning ways after the distraction, you might call it, of the Reddit-fueled rally. We mentioned some of those stocks taking a hit again in the pre-market right now. Let's bring in Kathryn Rooney Vera of Bulltick Capital Markets, who I'm sure you're getting a lot of questions from investors after the run-up in stocks and then all the confusion with those day trader favorites recently. What's been your take on what's been happening in the markets?
Well, it's certainly been a tumultuous start to the year, John, and I think that's something that we're going to have to contend with for the foreseeable future. And you had mentioned getting back to record highs. Don't worry, we're going to get there. And the reason I think with such confidence that we're going to get there is that the motors of growth that have taken us to these high levels, regardless of pandemic, regardless of massive structural unemployment, continue. And those are both fiscal and monetary stimuli. Expect the Fed to continue. Expect the Fed to continue purchasing assets in enormous, inordinate amounts. Expect the Biden administration to come with another $2 trillion and more. So I think that this is something that the market is internalizing, that despite the bumpy road from Reddit, as you mentioned, and we're forgetting, but just 2 weeks ago we were talking about big tech censorship, and the possibility of the elimination of 230 for big tech. That's past the headline. So now we're talking about Reddit. I think in the end, John, we have to look at what is truly driving the markets. And in the absence of inflation, those motors of growth will only continue.
So as I'm listening to you, it sounds like you feel like the technology group that did a lot of heavy lifting last year and then seemed to run into some turbulence. And then this morning, we've already talked about, the big news at Amazon, obviously, is Jeff Bezos' transition. But I'm watching analysts bump up their target prices. Google's parent company, Alphabet, is higher. Are you suggesting that group will return to its winning ways?
Yes, I'm suggesting that the value rotation trade that was so popular at the beginning of the year was premature. So I do think that we're going to see a pickup in those sectors that have heretofore lagged tech, but we are certainly not done with the pandemic. There's the threat of mutations, slow rollout of the virus, mutations, as I mentioned, in Brazil and South Africa and Britain. So I don't think that this is something that we need to set aside and look at as something on the back burner and something that we can all just applaud and say, back to the normalization trade. Not quite yet. So I would say, yes, stay long growth, but the trade that I'm recommending, John, to our ultra high net worth and institutional clients is the barbell strategy. It makes the most sense. I think it's the most prudent in this market that is, in my view, basically manipulated by fiscal and monetary stimuli. And that is long risk, specifically long the emerging markets in both equities and fixed income, because it's the asset class that has not yet been exploited to the max, but offset that with 100% hedge using tips, using alternative assets, such as private equity, venture capital. This is an asset class with zero correlation effectively to the markets. And you want that. You want a diversified portfolio in times of perhaps distress or tumult. So we want the inflation hedge. I think the combination is exceedingly inflationary, and we want to protect our long positions, but we want to stay long the markets because, as I've mentioned ad nauseum, fiscal and monetary stimuli are here to stay until we get, unanchored inflation, which we don't see in the near term.
All right, and you mentioned tips. Just for those who don't know, those are Treasury inflation-protected securities, just one of the tools that you have as an investor at your disposal. Since you talked a little bit about the vaccine variants, I want to alert our audience to an interesting chart that our colleagues at Bloomberg put together, because the estimate now is that about 3% of the world's population will be vaccinated by the end of February, and generally the most vulnerable 3%. And the rate of vaccine administration is outpacing fresh virus cases in most of the major hotspots, the US, India, and Brazil. What we're showing our audience right now, Kathryn, is basically the global daily case count. And what you see from that is the 7, the 14, the 21-day moving averages for global cases are at their lowest level in 2 months, and they have been falling rapidly. Now, is the new variant variance, I should say, a concern? Absolutely. But I guess I wonder what part of that development that I just showed our audience is the markets looking at? I mean, do they have sort of certain benchmark numbers on how much of the world is vaccinated to be, I suppose, more comfortable with being fully invested in stocks?
Right, and those are great numbers, and I'll add to them. Just here in the United States, since vaccine distribution began back in December 14th, I just happened to look at these numbers before our call this morning, more than 32 million doses have already been administered, reaching 7.8% of the population here in the United States. The U.S. is currently administering about 1.3 million shots a day, so that's phenomenal, and that's great news. I think the market has already discounted that this vaccine means eradication. So hopefully that's the case, but really none of us know. And if we do get variants that the current pharmaceutical companies with their fantastic scientific technology cannot address, then I think that's something the market will contend with if it becomes an issue. But right now, I think all signs point to optimism, if not euphoria, on the global stage with regard to the change in administration in the U.S. and the potential implications that could mean. The market seems to think it's fantastic. And with the vaccine and with the expectations on earnings growth. Now, one can debate, and I think the debate should be in if the market is discounting too much optimism into all of the challenges that we're going to face this year, John.
Okay. Well, good food for thought. Kathryn, always good to get your perspective. We do appreciate it. Kathryn Rooney Vera joining us from Bull Tick Capital Markets with her take on stocks. And